Hi Dan, it's Trevor.
Good morning to you, Trevor.
Morning.
I shall just make you the presenter. Okay. Okay, you should be able to share your screen now.
Okay.
Okay. Yeah, we're looking at the US dollar index.
Okay, let's go to the euro, which is where we're going to start.
Okay. Okay, yes, US dollar euro weekly.
Yeah.
Okay. I make it 9 a.m. I think we can get started, Trevor, if you're ready.
Yeah, I'm ready.
Excellent. Okay, hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours' time. So if you'd like to watch it again, you can do so there. And we'd love it if you'd also subscribe to our channel and click the bell to get notified. The webinar handouts can be downloaded from the Handouts tab of the GoToWebinar control panel. If you're having any problems locating or downloading these things, please let me know and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar. And the second is a CFD guide, which is basically all the different products that we offer at FXChoice. If you're watching on YouTube, these handouts will be available below the video in the description box. Sure you all know Trevor by now, but for those of you who don't, he has over 40 years experience as a technical analyst and trader and was former global head of technical analysis at Bloomberg. Trevor, I suppose over to you.
Yes, hi. Hi everybody and welcome. Today, as usual, we're going to go through the markets, starting with the currencies and cryptos, precious commodities, and then stock indices. Please ask any questions. Stop me at any point. Send a message to Dan in the chat box, and he will post the question to me or any security you want me to cover within reason, as long as it leaves us enough time to get through everything. Today, I'm going to focus on gold and the phenomenal move that we got up, and really try and answer the question: can it keep going? Let's start off with the currencies, and before we get going, let's look at the relative rotation graphs here. I'm going to add the explanation of the relative rotation graphs to the sheet, the PDF sheet that Dan was talking about there, explaining the charts I showed. This isn't included. Those of you that have been here before will notice the picture has changed quite a lot this week. Just very, very briefly, what this is showing you is here we've got the G10 currencies. We've got on the right-hand side of this vertical line here, things which are stronger than the US dollar. So the Canadian dollar furthest to the right is strongest. And then the other axis here is with positive momentum. So we've actually got literally nothing at all here. And that's a pretty big indictment of the currencies, because the dollar itself is weak, and yet so many of the currencies are even weaker than the dollar itself, leading the dollar down. So we've always had the Japanese yen left of the line here, but it's joined by the Australian dollar, surprisingly, in my opinion anyway, Norwegian crown also, and New Zealand dollar also very close together there. You know, competing to be even weaker than the US dollar itself. We've got the euro, the Swedish crown here, the Swiss franc here, the pound is second to the Canadian dollar. So we've been very bullish of the Canadian dollar on a relative basis for many weeks now, and that has been the correct thing to be, and the pound second best and the euro third best. But it's really, it's become much clearer as the rest have really separated and moved off to the left. That is, become an even worse proposition than the really bad US dollar. Okay, so that's the background picture. Let's go to the individual charts themselves. So let's look at the euro itself, you know, right of the dollar, strengthening against the dollar. Nice looking chart. This is a weekly chart, of course, big picture chart. Just refreshing ourselves. We had this big consolidation in 2020, second half of 2020, pushed to a new high, pulled back to 117, back to retest this, finding support at that level, quite impressively pushing up, and now testing the high here. And this the chart really does look good. It is a beneficiary of the weak dollar. Resistance from January at 123 and the 2017 high as well. Let me just show you that. I know it's a long time ago, but here we are here. So we've got the 2020 high here, and then right back here, 2017 high here. So we're pushing up towards those, and this probably best shows the picture and the incredible vulnerability of the US dollar itself here. So breaking this level here will have really a seismic impact and the dollar will become in danger of being kind of out of control in its fall. It is falling, it's falling hard and it's falling quite fast, but it's now getting to an extremely important danger level for it if it breaks that level here, which it looks like it wants to do. Jumping now to the daily chart, the picture here is we've got short-term resistance at 122.50 here. We've got rising low pattern here, which is a bullish pattern. The moving averages are all in the right order and pointing upwards here. The ADX is a fairly reasonable 20 reading, 30 reading here, so the trend is strong. The MACD is just turned negative here. It's rather flat near the zero level here. But this is a bullish short-term chart approaching crucial, I'm going to use that word, crucial, significant resistance levels. So in the next few weeks, there's a battle going to go on here. And I wouldn't be surprised if the authorities in the Federal Reserve in America recognize this. I know they are chartists. They know the meaning of those levels there and what it will mean if they're broken. Let's move to the pound now, and a similar sort of chart when you look at it like this to the euro. But let's have a look at the long-term chart here. This was a big break, but we are testing this 142 level here. Very important level. Two highs here in 2018. We've got the spike high here earlier this year, and I want to bring in some more data here to show you off on the left what is above us on this. But what an amazing thing, you know, given Brexit and pandemic and so forth that we've got here. So we're testing this high here, and we're going back now to 2016, 2015 levels if this up move, which seems to be very strong, does indeed continue. So it's an impressive chart actually. So looking at the daily chart here, rising lows, channel we could possibly draw here. I've drawn this resistance level, which has now become support. We had the powerful break the other week and then retest, and then now pushing higher, gently higher. I don't think it's excessively you know, too strong, but it is moving higher and not looking yet like it wants to ease back. So the 140 also I should have mentioned with that high and the break and the retest low. 140 is itself a round number. So again, a good looking chart and the one that we like second best. But we like best of all the Canadian dollar. So let's jump to the Canadian dollar here, and here we've got this drifting pattern in the daily chart. But again, to why this is so incredibly important is the weekly chart. I'm going to go back now a really long term, 20 years worth of data. Look what's happening here. I'm going to move this line down here. We have broken this low here, and this really puts this enormous double top. It's a double top in the chart at 145 here. Have you ever seen a bigger double top than that one? Maybe the double bottom here. But the implication of this would be a drop right back to about 1 again. It is very bearish chart. Very little support here in here. Support comes in right down here, run at 105 area, 105, 110 area here. But between here and here, it could move quite fast. So this could get a bit out of control, I think. So going back to the daily chart, well, this is a bit of a dip here, and in the context of the long-term chart, I think it's an opportunity there, and it's basing, looking like it's turning up. The RSI is diverging upwards, and the MACD is too. So any break of these short-term highs here for shorter-term traders, I think would be a good place to re-enter or enter if you're not in it, and you've got an obvious place to protect yourself below this low and the big 120 number itself. We have got short-term resistance, of course, centered from 125 upwards, but there's quite a good gap between here and there. But we like the Canadian dollar, and it probably shows more than anything else the vulnerability of the US dollar itself. I did want to look at a follow up from last week. We were talking about the Norwegian crown there. Remember where it was in the RRG, Norwegian crown. It's moved right over here now. So it's lost all its attractiveness, if you like, from my perspective. So here it is. Look at the weekly chart here. So here's the weekly chart holding this level here, but it's still overall a threatening sort of chart that could resolve itself to the downside, but it's bouncing pretty well here. And this one, which was a leader, is now a laggard in terms of the US dollar itself. So it's already gone off my list of attractive currencies versus the dollar. So it's actually looking, quite bottomy here, like it might go up. That's dollar up and Norwegian crown down. All right, so the key theme here is that the dollar is weak and actually getting now very alarmingly weak, and the pace of fall could potentially increase here unless there's intervention. The beneficiaries are becoming quite clear in a select group: Canadian dollar, British pound, and euro dollar, main ones, and the other ones drifting further over to the left and underperforming. So there's a clear message there. Now moving to the cryptocurrencies again, I want
actually,
to show
Trevor,
you.
can I just
Yes?
interrupt you there? Yes, sorry, Trevor. We have a question from
Sure.
Gregory Amos. Thanks for your question. He asks, can we have a look at Eurozar? And how do you monitor exotics like these? Meaning, I understand how pairs fall off the radar. How do they pop back on?
Yes. Well, I have you see, I've got this FXChoice list here, which is a brief list actually just for this talk, so that I don't clutter up my analysis with so many things. But here's my big list, which goes on and on and on and on and on and on here. And actually, I can scan those pretty quickly, and that's what I do. So I have using the computer to show me things which are of interest. What interests me: strong trends, interests me moves against the trend, interests me weak moves against the trend. I have computer programs to show me those and draw my attention to opportunities, particularly in exotic things where the best opportunities are not always and very often not in the obvious. And so here's one that's so unobvious I have to actually add it. So it's a row here, so excuse me for a second, and it was the Euro ZER.
Yes.
Yeah. Okay. ZAR, sorry, isn't it? Euro Rand.
Mm-hmm.
There it is there. Okay, now I always go to the longer term chart here, and I see this is the Euro Rand falling, so Euro falling versus the Rand here, and I want to bring back, because I believe there's a very big support area here. I'm going to bring in 10 years of data. Yes, it is. Huge area of support that it's coming down to. So this is possibly what Gregory's thinking about here, is that we've had this enormous fall here, and starting to meet a very big area of support, which starts at 17 and goes down to 15.5 here, but really a floor for the market. But what I would caution, if that's your thinking, Gregory, is that have we seen any sign of the bottom coming into place? And I don't think we have. We've still got a regular oscillation here of lower highs and lower low. And I'm not going to say it must stop because it's got resistance to support. I want to see sign of it stopping. We haven't got a bearish divergence. We've got a lower low. The RSI, the MACD is negative. The trend here is rising. The ADX is saying it's a low reading, but it's a weak trend, but it's trend itself is strengthening. And so I'm not ready to buy this yet, although I expect that it will stabilize somewhere closer to here. But I'm not going to forecast where. I'll wait until I see it happening. And with a kind of move like this, it will probably be not a V shape. It'll probably give you plenty of notice and give you a quite clear picture, forming maybe a double bottom or a reverse head and shoulder or a saucer or one of those typical longer term basing sort of patterns. That's what I'd be looking for rather than a sudden one. So I don't think you have to hurry. But I do think if you're thinking like that you're on the right track. This is a potential opportunity coming up, and we'll monitor this very for that. So should go on your radar. I hope that's answered the question.
Well, he says thank you very much.
Okay, all right. Okay, so cryptos now. Here we're looking at the relative rotation graphs. In the middle here is the US dollar. Everything on the left of it is weaker than the US dollar. So I've got Litecoin, Ethereum, and Bitcoin, three majors here. All of them quite far to the left of. And this is, if you look at the readings here, these are underperforming by 30% or so on a relative basis compared to the dollar. The dollar is weak and these are weaker. Okay, so if you were an investor, a buy only kind of guy, this is not attractive at all as an investment. So not much you can say about that. They're all weak compared to the US dollar. Litecoin the weakest, but that's and really I think it's completely shot as far as the chart is concerned. So let's have a look at them very quickly here. So here, first of all, Bitcoin. Just decided to go blank on me. Everything gone blank on me. Oh, isn't that weird? Just give me a minute here. All right. Phew.
Here we go. Here we go. Yeah. Back in action.
I don't pay enough, do I? Bloomberg,
clearly.
Liquidity, Trade Signal, Jewel. I pay for all these things, and yeah, I have blank moments. Okay, so that's not what we wanted. We wanted Bitcoin weekly. It wasn't a Bitcoin issue, was it? No, it wasn't. Okay, so the Bitcoin weekly. Get this out of the way here. That's nobody cares about 10 years ago in Bitcoin. So Bitcoin, it come back to this 35,000 level here, where we had this pause at the beginning of the year, and it's seemingly finding support and stabilizing at that level. And I wouldn't put it beyond that. It could be stabilizing prior to another leg lower, or stabilizing prior to another leg higher. But the most interesting thing from my perspective is that this is a 50% retracement as I measure it from the start here, back at the 2020 low, up to the 65,000 high here, 50% retracement and stabilizing. Still weak. RSI is still going down. The MACD is still going down. And now, interestingly, the daily chart has disappeared from my screen. Yeah, that is really annoying. So, but I can do it here. Okay, so here, okay, so here's the stabilization going on. It itself is a little triangle, and so that means that we're building up increasing the tension. So declining here and climbing here. Quite regular pattern here. So we're getting ready for a breakout. It is a symmetrical triangle, so we can't say the bulls or the bears are stronger. And the RSI is reading 40, so it's kind of in the middle there, although it is rising here, which is more bullish than bearish. We've got clear levels, 39,000 and 33,000 and a bit for the breakout of the triangle, probably indicating that we're either legging lower or legging higher here. And this one has a fair chance of legging higher. But look at the resistance, be respectful of the resistance here. Head and shoulders pattern, complex consolidation here. It's now got a lot, it's not blue sky above, it's got a lot of resistance to get through. Now going to Ethereum. So here it came back to the 61.8. Remember, Bitcoin came back to 50% and held. Here we came back further. That means the bears could do more damage. The bears are stronger in this bull market, if you like. Came back to this big cigar consolidation here, and then bounced 1800, 2000 was the area. Again, we've got a sort of triangular shape here, but this is a less good-looking chart. The damage is more substantial here, and so of the two so far, this is the I would prefer Bitcoin over Ethereum if I was doing the recovery trade. And then Litecoin. Now this one here. Let's go to the weekly chart here. Sorry, having to do this. Now this crashed through 61.8. This was catastrophic. This, I would say, use the word broke the bull market. This was a really big break. And it also crashed through the support, as well, which is all now substantial resistance. This is now, looks like it will be a long time before we're at new highs. If that ever happens again on this, that was a profound breakdown on the chart. If I go to the daily chart here, of course, there's trading opportunities, of course, for it as we go. And I mean, really, the chart doesn't look good. The RSI is not bearish as such, but it's in the low area, doing its work in the low area here because it's weak. The MACD is bearish. I'm haunted by the extent of the fall itself. We've got support levels here, but we've got so much resistance now above. It's going to find it hard. There's going to be a lot of friction on the journey upwards. So Bitcoin doesn't look so bad if I can put it like that. It's got a block of resistance here. But it's got a gap between that. Now, where we are now, up to the heavy resistance starting at 48. So if the market does start to move up, I think it will be led this time by Bitcoin, and that will move to the right, leading the other two on the RRG chart. Now, the big subject of the day, which is gold, and I want to look at a very long-term chart here because, of course, we've been going up since 2015 in gold, higher lows pattern, big acceleration here, break of the 2011 high here, relatively brief flirt up here, setting up a series of resistance, $2,000, the round number, the high itself here, the all-time high itself, the 2072.50 there, and then this resistance here. Now then we've come down, and I think you can make a case for this being a flag pattern, big flag pattern, which is breaking up now. We talked a lot in the past about this double bottom here, but we're powering ahead here towards the 1950 resistance, which, given the momentum that we've got on the upside here, look at the RSI. This is a weekly chart, of course, but we've got higher highs in the RSI. It's very high, but it's pointing up. That's because it's strong. The MACD also still positive on this. And so looking very strong and very good. And actually, funny enough, the next bit on this might be easier. This is a daily chart, sorry, I think I said weekly. And so I think that we could jump towards this resistance level. But clearing 1950 clears us for these other resistance levels. And the point that I want to make about them is that in themselves, they're relatively light resistance levels, 2000, the round number. Well, we cleared that without any trouble there. It really didn't exert much. And then we were very brief, relatively briefly, up to the high there and so I don't think that these two resistances above will present great stumbling block for the market. Breaking the 1950 level should release a lot of energy, new energy, to the upside. We've got the ideal background for it. We've got, not out of hand inflation, but we've got the growing spectrum of inflation. We've got commodity inflation, and we've got the determination of the central banks to maintain easy monetary policy. So if gold can't do it now, I don't know when it can. But it does look really, really good chart and threatening to get really to be something in the near future. I want to just look at this relative to the S&P. So we talked about this quite a lot, and now it doesn't want to show me it. Don't know why. There. Okay, let's go back here. And the gold-silver ratio here. Let me talk about this, then I want to go back to the gold versus the S&P. The gold-silver ratio is flat. It's very, very flat. So if you're trying to make a choice between gold and silver, basically the message of this is it doesn't matter which one you take, because they're moving in tandem with each other. They're correlating with each other. The chart of silver is not as good looking, I think, as the gold chart, and therefore of the two, because of the potential for the big breakout on gold 1950, I would prefer gold rather than silver. But at the moment, these two moves that we've had here have been basically mirrors of each other, and so you weren't any better off in gold or in silver. Let me have another go at this. Oh yes, so it's decided to waken up here, and so this is gold divided by the S&P. At this point here, you were better off in gold than in US stocks, and US 500 here worse. And what seems to be happening here is that this important level here, which you can see over let me go back even more than 20 years. Okay, so let's go back to 1990. Here, you can see the importance of this level here, this basing level here, which is, let's move this line down a bit. Doesn't want to move. It's really should be down here at 0.9. It seems like it's held and it's basing and turning up. It had this pullback here. We talked about that. You know, this is a very, very long period of time, it fell away here. Now it seems to be breaking up again here. So this is gold outperforming the S&P. So many of you will be used to gold underperforming the S&P, which has happened from mid 2020, but now that trend is changing. Let me just show you that on the daily chart. The range of 2 years here. So here you might draw this downtrend line here. The new uptrend line here. So we're moving up now quite strongly in the ratio. Gold better than the S&P. Now the S&P we're going to come on to now, and many people don't really like the idea of buying the S&P so high and looking a little bit tired. So, but I think great opportunity in gold, potentially, you know, when if this level is taken out, which given the momentum we've got right now, looks like it's going to happen. That could release an explosive amount of energy in gold, and that ratio there is telling us the story. This long-term relationship of gold underperforming the S&P maybe coming to an end. Now moving to Brent crude oil. Here we're ranging really, but with an ascending pattern here. We've got higher lows in place here, but we've got this big resistance level at $70 here, and $70 is very important. Ascending triangle, so it's looking more likely to break up than down, but it's very, very hesitant. It's churning all this year. It's been churning below $70 here, but every time it comes back, the bulls get control earlier. So this is building up to potentially an explosive move to the upside. And so I'm really hoping that we're going to get a big move here. The thing is, don't think it's really going to be now. It's rather weak as it tries to make the break there. So I think it will break up, but not now, is what I'm thinking. Okay, now moving to the stock indices, starting with the US 500. Here, we've got the higher lows pattern here, but we haven't really made much progress in the last couple of months in America. It's been well, we made its high 3 or 4 weeks ago, and it's trading below that now. The pattern is still bullish, intermediate and long-term bullish, but it's struggling, and we've got a lot of breakup of the leaders in the in it, and so some are going down quite strongly rather than everything going up. So we haven't got the breadth that we had before, which can be an indication of a top when the rise is quite concentrated. So it's still officially, obviously bullish, and possibly going on to make new highs, but it's finding it harder to do it. It's a bit like this period here. Going to the Nasdaq. So here we've got potentially a worrying sort of wedge here, high and then a higher high and a failure here, but then these rising lows pattern in here. I hate wedges because they, new high is bullish and then it fails again, but it is a sign of loss of momentum. But we're right in the middle of the wedge, so there's no threat to breaking up or breaking down currently on it, but I'll be very open to the break of this lower line being the end of this move here. But in the short term, inside the wedge itself, it looks bullish, and so it looks as though more likely we're going to revisit the top end of the wedge before the bottom end of the wedge. Going to the FTSE. FTSE doing well, really doing well. Who'd have believed it, really? But it's benefiting from the commodities boom a bit here, but it's got it's been hindered by a strong sterling. So here's the weekly chart. Let's bring in some more data here. So we've pushed ahead strongly towards this big resistance, and this is what worries me here. It starts at 7,200 and goes up to 7,800. We spent 3 years in that trading range there. That's a massive resistance. We plummeted on the Brexit, and then we've made our way all the way back up to the consolidation there. It's still looking bullish in the shorter term, that's great that it is, but beware, ahead of you here is very substantial resistance. Higher lows intact, indicators looking pretty good, so to continue higher towards substantial resistance. So for the longer term, this may not be the best bet at all. Looking at the DAX, the German 30 here, higher lows pattern, Good constructive pattern. The RSI looking okay. The MACD just about okay here. But let's look at the longer term picture. Is this attractive or not? So the weekly chart here, and let's go to 5 years of that. And you see this looks much more attractive than the FTSE. The FTSE's got that block of resistance above it. Here we've got a block of support below it. This is broken. This is gone free and clear into the blue sky. Much more attractive proposition here. And then I wanted to look at also the Japan 225. The Japan 225, many of you that do this call, I favored a lot from the long-term perspective until the second quarter of this year, and it's where now we look as though we're forming, I think, a bullish flag. We're correcting this breakout point, powerful move here, but I think setting up for another substantial leg higher. I'm so bullish about this for reasons which I'll just show you. I want a big chart here. I'm going to put the start date on this in 1980. Okay, you don't know anything about the 80s, do you? But here we are. Here, the reason is look where we are here. We're right back to where we were in 1990, and the all-time high was made right at the end of the 80s. There, and I think we're on our way up to that, and this is part of the journey up, and maybe the next leg will be the one that will take us to the high. So I'm watching this for potentially, incredibly bullish breakout move and a resumption of this powerful trend and attack on the all-time highs. And nobody ever thought, I never thought that we would ever be going back to those 1980s highs again. So watch the flag pattern here. It's very clear where it is, the breakout point on it, and it should break to the upside. These normally do break to the upside. Now on the individual stocks themselves, there's a clear message to me here. We used to talk about the FANG stocks. We talked about the FANG stocks because they moved together. They led the market and they all moved together, but they're broken apart now. Nobody ever mentions FANGs now because some of the FANGs are strong and some of the FANGs are weak. But what the things which are really most attractive and strongest, and the ones that I keep banging on about, are the banks. If I go down here through, let's go Bank of America, for example. What have we got? Nice strong chart here. Come down a bit more, JP Morgan here. Nice strong chart. Market, it's office high here, and it's not as strong as the other ones. What have we got to go down further? Now Paribas is also looking good in France here, now strong, could potentially be breaking up here, and then Deutsche Bank, I find it hard to say it, but it's looking rampantly strong. It should be bankrupt, but it isn't. It's got a really strong chart here. And then in the UK, we've got a couple of interesting charts here. Both of them could be about to have chart breaks. So if you're not on the bandwagon of banks, then this is Barclays, and we've got this resistance level here at 200, very clear, important level. Moving up towards that could be explosive if that breaks. And then HSBC here breaking, testing and breaking its important resistance here. So the others are really in very, very strong trends already, but Barclays and HSBC are at breakout levels, close to breakout levels, and if you're not in it, therefore maybe the better place to get in it. But let's look at now the technology area. We've got a very mixed picture here. We hate really Amazon. Here, this doesn't look like a strong stock, does it? Looks like a really mediocre kind of stock. Alibaba, Look at that. That looks like a terrible stock here. Intel, I know these are not all fangs, but Intel, again, looking like it might be a rally for a sell opportunity here. Netflix, okay, doesn't look good. Lots of resistance above, looks horrible, really, as AT&T, okay, look at that. There, that's back into a big consolidation area. And finally, Tesla. And look at that. I mean, it's 30% off its highs, Tesla. However, watch out for Apple. Look at that there. That's testing its uptrend line here. That could leg lower quite sharply here. So watch out for Apple. But I should have saved the hit. However, until now, Facebook is a completely different picture here. This is looking great. Facebook looks as though it's testing its high and about to leg higher. This one is really, really strong. Google also. Alphabet, of course. Here, looking good, testing its high, rising lows pattern here. And then Microsoft, again, potentially looking good. It's a bit below its high there, but we've got the high lows pattern. This does look as though it'll continue on higher. And then the one I like most is Nvidia. Here's Nvidia just testing its high here, and a wonderful day on Friday. And I think this week it should burst forward from here and make its breakout. So a bit like Barclays and HSBC, you know, just flirting with its high, and I think making its break to the upside now, which should bring in a lot more buying to follow it as it clears that high. All right, my friends.
Trevor, thank you very much. No, that's it. Thank you, Trevor. We had some various requests about the relative rotation graphs, but you've already covered those. So I think that's it, Trevor. I think if we can sign off for the day. Thank you very much for attending, everyone. Please join us again, same time, same place next week. And don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch from the beginning, or you just want to watch a short piece again, you can do so there. Head over to our channel and don't forget to subscribe and click the bell to get notified. Okay, anything to add, Trevor?
No, thank you very much indeed. Sorry about my chart warble early on there, but I do thank you for attending. I hope you find it useful, and I do hope the trend will be with you.
Thanks, Trevor. Goodbye, everybody.
Okay. Bye-bye. Thanks, Dan.
Bye-bye.
Bye.